Justice Department reportedly weighing whether to charge at least one bank over growing interest rate fixing scandal. You may know bank giant Barclays has already paid nearly $500 million in fines for illegally manipulating the rates that banks charge each other to borrow money. That rate has a huge effect on the economy. Everything from credit cards to car loans, mortgage rates, it all factors in. So when banks mess with those rates, we potentially all pay the price. And it still remains to be seen whether the Treasury Secretary, Tim Geithner, knew about this bank manipulation, the rate manipulation in the first place, back when he was ahead of the New York Federal Reserve Bank. Judge Napolitano is in the House now to talk about all this. It's the LIBOR rate, and it's kind of foreign to most people. I mean,
it is.
You don't really know that much about it, but man, it's important.
Well, it's extremely important. So think of it this way. The biggest banks in London each morning announce what they're going to charge each other for money, and that number is averaged. So LIBOR is just an acronym for the names of these banks and the offering of it. London Interbank Offered Rate, well, whatever that rate is the baseline for millions of other loans and mortgages around the country. LIBOR plus 2. You'll pay that baseline plus another 2 percentage points. We now discover that some of the London banks, many of whom also do business in the United States, were intentionally inaccurately reporting what those numbers were so as to goose up this rate, so as to be paid a higher interest rate. Now, that affects many, many banks and many people paying their loans, some of whom have nothing to do with the banks that concocted this. You may get a loan from the First National Bank of Oxford, Mississippi, and they may say, Shep, you're a good risk, we're going to charge you LIBOR. Your rate went up because of these shenanigans in London, even though your bank in Oxford had nothing to do with it. Your bank overcharged you in my hypothetical, and you overpaid. Now comes the government. The government decides to prosecute criminally, to sue civilly, and to administer, to regulate administratively. And they collect hundreds of millions in fees and fines from the banks. Question, where does that money go? To the government, not to the innocent lenders who overpaid because LIBOR was inaccurately calculated.
Well, now I'd be very curious to know who knew what when, especially when the government is making money off this. And it sounds like a tax on us all.
Well, what's very serious, and you mentioned it a few moments ago at the end of the intro here, is the present Secretary of the Treasury, Timothy Geithner, was the president of the New York Federal Reserve at the time that this was going on. Did he know about it? Did he look the other way? Did the New York Federal Reserve have any liability here? We'll see how deep the Obama Justice Department wants to dig as it investigates this one.
Well, there's been a lot written already, and it sounds like, strangely, a lot of people knew this was going on.
Shep, you're talking about millions of loans and trillions of dollars. This may very well be one of the largest instances of bank orchestrated fraud in the history of the world.
Wow, the banks are committing fraud against the people. It's hard to imagine.
Who would have heard of such a thing?
I never would have thought that possible.
We'll see where it goes.
Thank you.